Hi, everyone. Welcome to day 2 of the Friendsgiving 2022 conference, brought to you by TradeOutLoud.com and TimingResearch.com. And keep in mind, of course, this is for educational purposes only, and trading is not suitable for all people. Please be sure to consult your financial advisor and only trade with money you can afford to lose. Also, I am recording each of these presentations individually, and those will be available on the Timing Research site and Timing Research YouTube. So today we are opening day 2 of the event with Valerie Fox. So I'm going to go ahead and turn it over to her.
Hello, good morning, everyone, or if you're like me, good afternoon. I'm in Portugal. Do we have anyone on this half of the globe where it's the afternoon for you? I saw some participants saying they were in Mexico and Puerto Rico. Ooh, South Africa. Yeah, lots of representation on these calls. I absolutely love that. Well, good morning or afternoon. Oh, Algeria. Wow, Belgium. Lots of awesome representation on this call. I just love the reach that this group gets. India, wow, Florida. So hello all over the world. Colombia, the list keeps going. I seriously love this. Okay, well, let's go ahead and jump in because I'm on the clock here. Hello and welcome to this year's Friendsgiving online trading conference. I've done these for several years and I just love getting some time in front of all of you. My name is Valerie Fox, and I'm going to be sharing 3 easy ways to trade the trend. Before I begin, though, I know there's a lot of you on the call and several hundred more of you will be watching the recording, and not all of you know me. So I'm just going to do a very brief introduction to, give you a little context for who I am and what I'm about. So I've been trading Forex and coaching other traders for over a decade. As a Forex trader, I've been able to build, implement, optimize, and scale multiple strategies for myself and my personal investments, over the last decade plus. And I've been able to ultimately produce job replacing income for myself and my family. So this has allowed us to live anywhere in the world. And I think that's pretty darn cool because it was a dream of mine for so many years when I was early trading. And while I was born and raised in the United States, I've now chosen to call Portugal home. And I live on the beautiful island of Madeira. If anyone's been to Madeira, give me a yes in the chat. I'm just curious. Most people have never even heard of the island of Madeira. It's a beautiful Portuguese island off the coast of Morocco, actually. Freddie's been there. Yes, Freddie in Mexico has been to Madeira. I love that. If you've never heard of it, look it up for fun. It'll be your fun little fact of learning something new other than what you're going to learn from a trading perspective. Okay, so that's me on the personal side, right? I'm still an active trader as we speak each and every day. And then as a trading coach, I've been able to ultimately help traders build their confidence, improve their consistency in their results, and ultimately become more profitable. So I love doing that. And I've worked with traders in all different market types with a wide range of account sizes, from super small, couple $100 accounts to multiple 6-figure accounts. So I just love working with traders and paying it forward and helping educate people with some of the wisdom that I've gained over the years. So speaking of that, I continue to give back to the trading community with my trade-focused podcast. I launched it earlier this year. It's available for free on Anchor FM, Spotify, Google Podcast, Amazon, all your favorite listening platforms. So I invite you to search for that if you aren't actively already listening. It's called the Trade Focus Podcast. And then lastly, I'm the author of the Self-Reliant Trader Method book, which is available on my website, tradefocused.com, and also available on Amazon, Kindle, Audible, again, all of your favorite reading and or listening platforms. Okay, so that's enough about me. Let's dive in to the content. We already covered a brief disclaimer, but again, this is educational purposes only. It's not to be considered investment or trading advice. Obviously, trading is not for everyone, and you're solely responsible for your own trading results. So How many of you have heard this saying before? The trend is your friend. Give me a yes or no in the comments. I love to use the chat. I try to make these as interactive as possible. We've got lots of yeses flying through. How many of you have heard this little variation, except at the end when it bends? So the trend never lasts forever. But there are some very easy ways to identify the trend in trading and to give yourself an edge. There's also ways to identify or kind of be alerted to the fact of when the trend might be ending as well. So I'm going to be talking about both of those today. My three favorite ways. Before we start, how many of you today with your trading trade in alignment with the trend? Give me a 1 if you do. Give me a 2 if you do not. And there's no right or wrong answer. Obviously, there's a million ways to trade. We're getting several 1s, a couple of 2s. Okay, yeah, 1s and 2s, people doing both. Yeah, I mean, the thing about trading with the trend is price never moves in a straight line, right? So even when an instrument is trending, it doesn't go straight up or straight down, it moves in waves. So there's plenty of opportunities to both trade in alignment with the trend and counter trend. As long as, I think it's really valuable to be able to identify which direction is the trend, as that might actually make a difference with how you manage the trade, how quickly you lock in profits or whether you let it run, etc. So, okay, it looks like we have a lot of variation on the call. Mostly, I would say people trading with the trend, but certainly some people not trading with the trend. Either way, whether you trade the trend or without the trend, there's some really easy ways to identify the trend, or if you're trading out of alignment with the trend. And I have 3 fun, easy ways that I'm going to share with you on today's presentation. And I'll be curious to see, which ones of these things you guys use as we go along as well. So let's jump right in. The first way to easily identify and trade the trend is using trend lines or trend channels. So what that looks like, I'm going to do some visuals here. I tried to do I'm going to use the same image on all of them, just so you can really kind of see the differences between each of these 3 ways. So a trend line or a trend channel, I'm going to be just kind of freehand drawing here. So hopefully it's not going to be too messy. But ultimately, if you start at the left here and you kind of go from the lows and connect the highs and the lows, you build this channel. It's a trend channel. And ultimately, this gives you the trend. That's a downtrend. Then you can connect the dots here. This is an uptrend. And then you can connect the dots here, with all the highs and the lows. There are drawing tools in most of the platforms where you can do, very precise straight lines and channels. But ultimately, this is a very easy way, kind of more of a connect the dots way to identify the trend. So here we're in a downtrend, here we're in an uptrend, here we're in a downtrend. It's very, very easy. How many of you if you use channel or trend lines to trend trade, or just to identify the trend on your charts, type trend lines in the chat box. Let's see how many trend line users we have here. It might not be the only thing you use. It might not be the only way you trade. So yeah, we've got several people, 1, 2, 3, 4, 5, 6 EMAs and trend lines. Yep, so quite a few of you are using trend lines. This is a very common way to identify the trend. It's pretty easy visually. Also, all of these ways of identifying the trend, now we've got like 10, 20 people. The chat is kind of zooming past. I can't quite keep count. So a lot of trend line users. This is, again, super simple. You can be super specific with how you identify it and how you draw it on your charts. But ultimately, it's just a nice visual way to draw the trend. And then likewise, let me grab the little laser pointer here. Likewise, when you see that price down here starts going above what would have been the continuer trend, you see it pop above here, that's a signal to you that the trend might be changing or fizzling out, right? So once it's no longer making going lower and it breaks this upper trend line, then that might be a signal that you're kind of losing steam with your trend, the lock-in profits, etc. Likewise, here in the uptrend, we're going up, we're going higher and higher, but then when price drops below your lower trend line, that's a signal that you might want to, your trend is changing. Here's the downtrend over here. And again, we kind of go here, we test this, we go down, but then we sure enough blow up past it and kind of start an uptrend here. So yes, it's a great point. Someone mentioned in the chat, trend lines can only be drawn after the fact. Absolutely. So I'm going to be covering some lagging ways to identify trends and some non-lagging. So trend lines are lagging. Basically, you can only draw them up until the point, right, that price is at now. So if I were to say right now, where is price? Are we in an uptrend or a downtrend? Right here, what would you guys say? Uptrend or downtrend? Because yeah, it's really easy to look in hindsight and be like, oh yeah, that was a downtrend, that was an uptrend, that was a downtrend. But really the most vital piece of information that you can find out of this is being able to identify the trend in real time. And absolutely, you guys are all right. Uptrend, up, 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 uptrend. Perfect. So that makes it pretty simple. There are times, this doesn't really show it, but there are times when the markets can also go sideways where you're not really, you're moving more in a flat channel or some consolidation. Maybe there's a little pocket in here where you could maybe consider it a little sideways had you been kind of looking in the moment and not in hindsight, where, this is going down, but then these are starting to go up. You're seeing some consolidation right in here, but then eventually it does break up above it here to formalize what I would consider an uptrend for sure at this point. So the other thing I want to point out is, like, right now I'm on the Forex market and I'm on a daily chart. This exercise can be done on any candlestick chart. All of these exercises I'm going to show you on any charts, on any instruments in any market, and then also on any time frame. So I'm on the daily. You could easily do this on the weekly, on the 4 hour, on the 15 minute, on the 1 minute. So no matter what kind of trader you are, this can be applied to all the charts. Okay, so that's trend lines and channels. Let's go to the next one. Swing highs and swing lows. So this is more about price action. Let me show you what I mean by that. So swing highs and lows look something like this. This is the same exact chart we were just on. I removed all the things, but when you are looking at swing highs and lows, you're looking at these, price moves in waves, right? So it's going up and down and up and down and up and down. So the question is, oh, I don't want the pen. Hold on, let me get the highlighter. Let's erase that guy and let's use a highlighter. So this is considered price action, but this is where you look at the swing highs and the swing lows. And when the highs and lows are both going lower, then you're in a downtrend. When the highs and lows are both going higher, then you're in an uptrend. So you can see this is a downtrend, this is an uptrend, and then you go all the way here. The highs are all going lower here, the swing highs, the swing lows are also going lower. So you're in a downtrend. So pretty simple. How many of you use swings to identify trends? Swing highs, swing lows, type swings. Me, swing. What is a swing trade? Oh yeah, Cameron, I can answer that. So swing trading is not to be confused with swing highs and swing lows. Swing trading is a trading approach that ultimately is defined by the time frame of the chart that you trade on and the length of time that you hold your trades. So if we think about scalping is a form of trading where you're in and out of trades very quickly. You're probably trading on a 5-minute or 15-minute chart, and you're in and out, within an hour or maybe within a couple of hours. So they're pretty fast time trades and a low time frame. Swing trading, on the other hand, is more like trading on the 4-hour chart. So you're trading on a candlestick chart that it takes longer for the candlesticks to form. Your stop losses are also going to be a little bit larger in nature, and the moves on the chart that you're looking to see happen take a little bit longer to come to fruition. So you're in the trades longer, you're on a higher time frame, and the movements in terms of measurements are a little bit larger as well. So it just depends, there's a big difference in execution, in the amount of time that you need to be at your charts, and in the moves that you're looking to make between like scalping, day trading, swing trading. There's also position trading, which is kind of trading maybe on like the daily chart or the weekly chart. And then obviously, as you go higher into how long you hold trades, you get to the point where you're more investing, you're buying and holding for a longer period of time, looking for more fundamental moves in the market. So the time frame that you choose to trade on will kind of determine what trading approach is what I call it, what trading approach you use, which are you a scalper, an intraday trader, a day trader, a swing trader, position trader, etc. So hopefully that answered your question. Cameron asked, what platforms are best for scalping? You need to do your research for sure. Some things that are important when you choose a broker, I always like choosing regulated brokers in your country. They have a little bit more rules and regulations to protect the consumer or the individual traders. And then also, you want to pay attention to the cost of withdrawals, the cost of deposits, the cost of, transactions and spread costs, things like that. A lot of times you'll see some non-regulated broker make these really crazy promises. So just be really diligent when you look for brokers. You can always do, like, for example, if you're in the Forex market, you might do a Google search of like regulated Forex brokers in the United States, for example, and you're going to get a short list. And then from there, you can do some additional research on each of their websites. For spread costs would be important. Lower spreads would be important if you're scalping. And then also like good fills and good liquidity and things like that, where you're trading really liquid instruments. And then the best time frame for swing trading. So I'm a swing trader actively, and I trade on the 4-hour charts for my buys and sells and determining my entries and exits. I also use the daily, weekly, and monthly. I'm a multiple time frame person where I look at kind of the bigger picture on some higher time frames specific to trend, and then I'll go down to the 4-hour to kind of fine tune my entries and exits. And as a Forex trader, I personally use Oanda is my broker, but there's many good regulated ones as well. Good questions. I'm trying to stay on top of them. So keep them coming, and then I'll just continue going here. So this is swing highs and lows. Some people struggle to see swing highs and swing lows, the little wicks. You can change to a line chart, or you can also add something called fractals. So these are called the Williams fractal in Oanda or TradingView. They're just called fractals, and I have the settings set to 2. So what these little arrows are showing you, they're showing you swing highs and lows. They're showing you wicks, like for the swing highs here, for example. The 2 candles to the left and the 2 candles to the right are lower than it, making it a swing high. So the swing lows have 2 candles to the left and 2 candles to the right that are higher than the swing low. So if, for example, you really kind of struggle to see these automatically, kind of a shortcut, if you will, let me delete these. As you trade more, especially if you're a price action trader, you'll be able to see swing highs and lows pretty easily. But again, if you struggle, you can add fractals, and that makes it a lot easier to see swing highs and swing lows for price action. Does anyone use fractals? Just kind of curious. I think it's always super fascinating when you have big groups of traders from all over the world in all different marketplaces trading. Use RSI trends. I use fractals. Okay, so a couple of you are using fractals. It's just an easy way to see swing highs and lows. You can also change the settings. Maybe if you want to see, if you want to see fractals that are 3 to each side or 4 to each side, where you're seeing kind of more meaningful swings, you can also change the settings. So in TradingView, you would just add the indicator. You would search for fractals in the indicators list, and it would be able to add to the viewing screen. And if you can't figure it out, you can also just do a quick Google search. But the indicator is called the Williams fractal, or just fractals for short. Okay, and then the third easy way to find the trend on the charts very easily is to use moving averages. So there's a couple different ways that people use moving averages. I used to use moving averages. Now I'm more of a price action trader myself, but this is something that is really easy for people who kind of want just a very objective, straightforward. They don't have to look at their charts very long. You can do one moving average or multiple moving averages. So this is an example of just one moving average. And the way you read this is like this. So when the line is increasing, let me get a different color pen here. When the indicator is increasing, or it's on an incline, that indicates an uptrend. And it's an even stronger uptrend when price is operating above it. When price crosses below it, that signals a change in direction. And then eventually, shortly following it, you'll see that the incline go to a decline. And then that indicates you're in a downtrend. So this is an example of a 20 moving average. There's a lot of different ways you can, trade the trend using moving averages, but anytime price crosses the moving average, that's a signal that the tides are changing, right? That's one moving average. Yeah, an upslope is an uptrend, a downslope is a downtrend, exactly. This is an example of two moving averages. So there's a 20 and a 50. So the 20 is in pink. So when the 20 and the 50 is in, the 20 is in blue and the 50 is in pink. So when the 20 or the blue is above, let's see here. Sorry, I'm getting the lines change colors. When the pink, sorry, bear with me. Like I said, I don't use these all that often. Let me get all those extras. So basically, when the 20 moving average, the lower of the one, that leads the way. So when the 20 is below the 50, then it's a sell. When the 20 is above, it's an uptrend. You see a little confusion here. Again, these are going down. The 20 is below, and you see the cross here for just a little bit of an uptrend. So depending upon how you define the trend, you might see a little bit of variation in the definition of the trend on the charts. So the reason I say that, and the reason I show all these different ways, and there's even using 3 that you can do as well. Here's a 10 added to the 50 and the 20. So the 10 is a little bit more faster to react than the 50 and the 20. You could use these scenarios where, they properly get in line here, you get a retest, and then you write it down until price crosses. Then you might want to liquidate your position or, lock in profits here. Likewise, here when the purple finally crosses below, and then you get the blue crossing below, that might be a good time to buy with the retest, or to sell, I'm sorry, and then you can write it down. until price crosses back over the purple, then you can lock in some profit. So, it's up to you. There's a lot of different ways. You really should study all three of these and see which ones show up to you more easily. Trading is such a visual art, and you need to be able to clearly say, I have a trend. And then beyond the trend, you need to figure out where would you enter and where would you exit, right? So I'm only finding the trend in three ways. There's a million other ways you can identify the trend. You can use exponential moving averages. You can use these flat moving averages. You can use Fibonacci moving averages. You can use oscillators or Bollinger Bands. There's a million different ways. So what I want to get out here is there are a lot of ways to identify the trend. Pick one and use it to help find an edge with your trading, right? How many of you, by the way, I forgot to ask, if you're using moving averages, say 1, 2, or 3, how many moving averages are you using? If you're trading actively with moving averages, how many moving averages do you have on your screen? We've got 2, 3, 3, 2, 3 plus 4. So yeah, obviously you can layer on as many as you want to. So it seems like most people, at least on this call, are at least using 2. It probably also depends what you're layering in with your qualification process. But again, do some studying, be a student of the game and study the charts. Go back and see what you easily can see and identify to be an edge in the market. That's half the battle, just finding how you will find your edge in the market. So these again were 3 easy ways to find the trend lines and channels, swing highs and lows, or price action, or fractals, whatever you want to call it. Moving averages. I showed straight moving averages, but there's obviously a bevy of averages that can be used. And then from there, if you decide you want to trade the trend, the next steps to kind of put it into a full system, so to speak, would be to do the following. You need to finalize your qualifier, right? Which way are you going to identify the trend? Are there any other qualifying factors you're going to use or look for? And what time frames are you going to be analyzing? Are you just going to analyze the 15-minute chart? Are you going to look at the monthly chart and the weekly chart, but then trade on the 4-hour chart? Find your time frame or time frames along with your qualifying factors that you need to see on the charts in order to take this to the next step, right? Then from there, after you know how you're going to qualify your trades, you know which time frames you're going to look at, then you're going to need to determine how and when you're going to enter. Most traders, especially when trading the trend, wait for a pullback, right? So if we kind of go back, let me go back to a chart here real fast. So for example, a lot of traders won't just buy anywhere. If they see this trend setting up like right here, they might say, I'm going to sell, but I'm going to wait for it to come back up and retest the line before it goes further. Or they might draw Fibonacci and wait for like a 76 retracement before it goes down. You can use the trend lines themselves, or you can use, Bollinger Bands, Fibonacci's, pivots, kind of whatever your preference is in terms of identifying your entry. But you could use, this would be another place potentially where price is either going to cross it or it's just pulling back to get more steam to go down. So you can use some of these touches. Likewise sometimes it's easier to see these. Oh, let me clear this. Sometimes it's good to have visual examples here. So price is going down, you're getting lower lows, lower highs right here, right? Price comes up and touches this. You might wait for it to close below it again, but then, on the next touch, we're still have a decline. We're still operating below it. You might do a sell there until price comes up. This would be a good time to reduce risk if you haven't already. Then when it closes below, you might say, oh, I'm going to wait for a pullback. In this example, it didn't pull back all the way. Price is going down, down, down. So anyways, you're not going to get all the entries, but you need to have a systematized way of identifying your entry once you've identified the trend. And from there, you need to also know your risk, right? I could do an entire presentation on risk. But ultimately, there should be a certain dollar amount or percentage that you're willing to risk on each trade. And then that's going to help you define your exit points, right? So you need to know not only where you're going to enter, but where you would exit in profit and loss on the trade. Again, you can use identifying factors of the trend or pivots, pivot extensions, MACD divergence, whatever, price action, highs and lows. When you see a shift happening in the markets, make sure that you are determining a precise exit both in profit and in loss. And when you define your exit and loss in advance, that allows you to manage your risk, right? How many of you always use a stop loss? Give me a yes or a no. Do you always use a stop with your trades? Yes, always, always, yes, yes, yay. A couple of no's, no problem. A mental stop loss. Eee. What happens if you're not at your computer when price gets to your stop loss, or if you get emotional with that mental stop loss? I found it's always really, really good not only to identify your stop loss, to determine your ultimate risk based on your entry, the amount of movement between your entry and your stop. It helps you create your position size so that you're not over leveraging yourself. So if that's not something you're doing today, there's things you can look up called position size calculators, where you can put in your entry price and your stop loss in terms of pips or price or bips, depending upon what you trade. And you could say, I only want to risk 5% of my account balance, or I only want to risk $1,000 or whatever that is, and it'll calculate your position size. I highly recommend checking that out if that's not something you do today. Real men don't use stops. Danny, come on. Likewise, you need to have an ultimate profit target. You might maybe tighten your stop loss as the trade moves in your favor, or take out some positions along the way to lock in profit. But ultimately, you should have an ultimate goal, in my opinion, not just like have an endless trade out there. Because there's going to be opportunities, especially if it's a good trend, to just get in again and again and again. I know you're kidding, Danny, but thanks for the JK. I got a good chuckle out of that. And then lastly, once you, wow, this is getting really messy. Let me just erase all that and clean it up. Okay. Once you have done the first 3 steps, then from there, you're in the trade. You've already determined your ultimate stop and loss. There might be some opportunity to manage the trade, right? Depending upon how much movement or how much profit you're looking for, you might just have a set and forget where you have your ultimate profit point, your ultimate loss, and you just walk away because you have predefined orders. Or there might be scenarios where you want to if you're doing a buy, you buy down here, your ultimate profit's up here. Obviously, price kind of moves in waves most of the time on the way to things. There might be situations where you want to tighten your stop loss as the trade moves in your favor, to reduce risk, to get to break even, or to even lock in profit before your ultimate profit is hit. So that strategy is what I call the trade management protocol. And you should have that lined out and defined, and even I would go so far as to say written down before you ever enter a trade. All of these things are part of your strategy and should be written down on your trade plan. Just curious, how many of you have these details all defined and also written down? A defined and documented trade plan. Give me a yes or a no. Yes, a couple yeses, not yet, yes. That's such a quick win, yes and no. No, okay, so it's a blend, and that's okay. I would say if you don't have your trading strategy written down, that is a quick, easy thing that you should be able to do, and it will make a huge difference in your trading, right? It will make a huge difference in helping trading to become more operational in nature and less emotional. When you don't have your trading rules, whether it's how you qualify a trade, where you enter, where you exit in profit or loss, or how you manage your active trades, when you don't have that figured out and written down, more of just like a easy do this, Emotional decision-making can come into play. You'll act much more frequently out of alignment with your trading strategy. And ultimately, it becomes very, very difficult to get consistency in your results over time if you're not operating the same way every time you trade. And it's impossible to operate the same way every time you trade if you don't even have these rules baked out and written down. So for those of you that said no, or for those of you that said yes and no, or yes, but not quite, take the time, do yourself that favor, do yourself the justice of going through each of these and defining and writing them down so that you can build a duplicatable trading strategy day in and day out that can get you more consistency. That was one of the things I did way back in the day that really made a meaningful difference in my results. And that's what I help traders to do all the time now too. So thank you so much for being here with me. I hope you got a couple of golden nuggets to take away. Also, let's connect afterwards. I know there's a lot of presenters that are amazing, a lot of wealth of knowledge, but do me a favor and take a picture of this screen so we can connect. I have a free podcast called the Trade Focus Podcast. New episodes get released every week. They're short and sweet, 10, 15, 20 minutes, but they each have little nuggets really helping you grow your knowledge, strengthen your mindset, work on your operational discipline. I also have a book called The Self-Reliant Trader Method. You can read it in an afternoon, but it ultimately gives you the tools and the framework for building your strategy and optimizing your profitability so that you can really own your future as a trader. That can be reviewed and kind of looked more in detail at TradeFocus.com. I have a Facebook page if you want to follow me and kind of stay in the loop with all the upcoming things, special offers, podcasts, different speaking events, things like that. Facebook.com/Valerie Fox fan. And then as always, if you ever want to email me and have questions, you can email me at support@tradefocused.com. All right. And then I just, let's see, one more question I see Cameron asked, what platforms are best for fast liquidation? So you really just need to do your research, right? Or instant execution. It depends what you're trading, right? And you really need to look on the websites. They give you stats on instant execution. In terms of Forex, I'm a Forex trader, so that's what I can most easily speak to. But if you're trading the majors or the majors and the minors, they have good liquidity and instant execution in both directions because it's actually the largest traded market in the world on a daily basis. So check out Forex if you haven't. There's a lot of reasons I trade Forex. It's certainly not the only way. If you're concerned about liquidity and positions getting filled, just do your due diligence to look into the broker, look into the market itself that you're trading, and make sure you're not trading something that's super exotic that might have fewer traders. And then Cameron also asked, are there any trends that are consistent in patterns for bigger companies? So there's a lot of patterns out there that are well known by traders in any market and in any instrument. So if you are interested in becoming a patterned trader, you can just do a Google search on the best, top patterns to trade. Head and shoulders is definitely a pattern that I've traded in the past in several capacities. There's several others that you can get in alignment with a trend or also trade counter trend. The trend trading relevant to Brent and gold? Absolutely. Anything with a candlestick chart can be tradable. You can analyze the trend. So that's the really cool thing. Candlesticks are the same for any instrument. You can just toggle the time frames, basically the amount of time that each candlestick represents. And almost all brokers can show you charts in the candlestick format. You can also do line charts too. Mark is asking, I work one-on-one with individuals? Yep, I do have some one-on-one coaching, So if you're interested in that, probably be best for us to take the conversation offline, and you can send me an email at support@tradefocus.com. I'd be happy to tell you more about that, what kind of how that works and what the price is. And then Cameron also asked, can I have more than one account on DAS Trader? I'm not familiar with DAS Trader. So really that's more of a broker specific question that you would need to kind of check with your broker to see. I also see another question: how to identify the start of the trend and to know if the trend will last longer to optimize the entries and exits. Really, there's just kind of layering in some of your analysis. So for example, when prices making lower lows, lower highs, lower lows, lower highs, an indicator, for example, is going down. This is hindsight, but if you can imagine looking at it here and looking at it here and looking at it here, you just have to find things that you'll do. I always like having an ultimate target, as I mentioned, whether that's 1-to-1, 2-to-1, 3-to-1. Maybe you say, hey, when price goes down, I wait for a pullback to the line before I enter. You might miss some opportunities doing that, but there's several opportunities here. Eventually, price will cross that though. So you need to have a good exit position where you don't give all your profit back, right? So you really just need to do some studying and to find that start. But like in this example, the start of the trend, using a single moving average, for example, would be when price crosses and closes on the other side of the blue line. Once that happens, you're transitioning into a downtrend. I would probably also, personally, as a price action trader, wait for price to go lower than this previous low. So when this happened, you are in a downtrend, and then you just have to determine, are you going to wait for a pullback? Are you going to enter in real time and take it lower? Are you going to wait for price to pull back all the way to the line? Some of those things. This is all hindsight again, so it's easy for me to like show all these different scenarios, but you should have that pretty baked out. And if you don't know the answer, just simply pull up the charts and look, right? Look at the Aussie US dollar, look at, if you're trading stocks or indices or ETFs, whatever you're trading, look at several charts over time and just see what patterns or what commonalities you see. And that's kind of the basis or the starting point of how you can build out a trading strategy. And then you can tweak it from there, of course, as well. And Cameron, I'm not a stock trader, so I'm not the right person to ask there on long-term stocks to hold. So lots of good info on the internet. You might even see some presenters, some stock traders presenting throughout this event. So maybe look at the agenda and see if there might be some other presentations that could be valuable for you. And then do you use screeners? How many stocks do you follow? Okay, I'm a Forex trader, so I trade on the Forex side of things. I trade the majors and the minors, which is a total of 28 currency pairs that I will analyze and consider trading on. Certainly, if you're a stock trader, there's thousands and thousands of stocks. You need a way to properly narrow down your focus. So maybe that's market cap, maybe that's where price is in a 52-week range. Maybe it's stocks that are trending on multiple time frames. You need a certain way to narrow down. Are there any stock traders in the room? And if so, how do you narrow down which stocks you trade? Let's help 362204 here. News events are a very good topic to bring up while we're letting the chat kind of go here. So news events, as a swing trader, someone trading on the 4-hour, there's only one news event that I will not keep my trades or enter new trades, and that is non-farm payroll, which is a really big red flag news event that impacts currencies. Other than that, I will trade, open trades, keep trades open during news events, but the smaller time frame you go down, the smaller your stop loss will be and the less forgiving trades will be to spikes due to events. So for example, I used to trade my entries on the 15-minute chart as an intraday trader. And when I traded on the 15-minute chart, I did not trade any red flag news. So there's what's called a, there is a, let me get this screen back up. Sorry. There is a calendar you can search for at, or you can just go to forexfactory.com, forexfactory.com. It's a list of economic events that are announced in advance and scheduled. And there's red, yellow, and orange flagged events, which basically coincides to the volatility that those events bring into the Forex market and which currency it impacts. So for me, when I was day trading, I would not do any new entries when a currency had an upcoming red flag news. So you can filter to red, you can filter to the currencies that you trade, and you can see literally a daily calendar of the red flag news, so that if you want to stand aside when those volatile events are happening, there are definitely good reasons, especially when you're trading on smaller timeframes, that could be a good idea. There are also times, you know, for stock traders like earnings releases and things like that that are pretty volatile, or if you have an analyst that you know is launching, you know, speaking about a company, or you know, there's a lot of reasons depending upon what you trade that you might want to stand aside during planned news events of varying degrees. Another question, generally during news events, both side movements seen, how do you manage your positions? So again, for me, as a swing trader, my stop losses are pretty generous. So it gives enough wiggle room for the volatility that happens during these news announcements. So I just let it ride and I tighten and manage my trade like I would any other day. But if you're someone trading on a smaller time frame, you might want to close your trade before the news event. The Fed FOMC minutes, I believe, I'm not, as a day trader, all red flag news events I would not trade, which would include the FOMC meeting minutes. But as a swing trader, I only do not trade the non-farm payroll announcement, which is normally the first Friday of the month. Sometimes it can be a Thursday or the second Friday of the month, depending upon how the month falls, but it is scheduled each time. The FOMC meeting minutes can move the markets. So if you're trading smaller timeframes, you definitely might want to be aware of that. But if you're trading on the 4-hour charts or higher, it may not be relevant. You know, if you have a 50 pip stop loss or greater, you're going to have enough wiggle room there. Again, depending upon your trade management, to withstand a little bit of volatility when those meeting minutes come out. Okay. Well, thank you for all the questions. I loved all the engagement. I hope I was able to get all of your questions answered. Again, if you'd like to connect after the presentation, feel free to check out the podcast or my book, connect on Facebook, or even send me an email if there's a question I did not answer or something specific you'd like to know. All right, thanks everyone, and I will hand it back over to you guys.